All right, first time live on YouTube. First off, I just want to check and make sure that everything's in order here. Never gone live on YouTube, guys, so if anyone's even going to be watching, I'm sure most of you are probably going to watch this later, but I just want to double check, make sure everything's good. Okay, cool. We are live. Let's just let Twitter know too. Just post the link. So what we're going to do is we're going to go over all of my key levels for the week. And I'm going to give you guys what I think we could see in the markets for this upcoming week, kind of what my bias is going to be. And I'm going to be doing this from scratch here. So we actually have to get rid of all these levels. This is last week's levels. And we're just going to go from the beginning. So you can kind of see the whole process on how I actually map out all my levels and how I determine a bias. So yeah, I mean, I haven't looked at the charts all weekend. I haven't touched them. So I'm going to be just coming out here fresh right now. Got to get my eyes back into the groove. Let's see what we got. So I always start off on the weekly time frame. And obviously, I mean, I don't utilize the weekly too much, but I do think it's important to have the context of what we think the weekly draw is going to be. Now, in last week's forecast, we were actually wrong about the overall bias. I was expecting a bounce, and we didn't get it. But one of the most important things is to always give out the bullish and the bearish scenario and use lines in the sand for, if we hold a certain level, I'll maintain my bullish bias. If we lose a certain level, I will flip to a bearish bias, and I did give out that type of scenario, and that is what we got. And we managed to catch the downside. And in reality, we kind of just, we did break below, but we're still stuck in this overall range on the daily chart. And I'm going to get into that as well. Got to pop us in. Let's get into this. All right. So starting off on the weekly time frame, it's just been, what is this? 1, 2, 3, 4 weeks in a row, 4 bearish weeks in a row, which is quite a lot, especially for the indexes. Now, we have a couple of key levels just to the downside. First off, my eyes are going to go to this weekly swing low right here. So that's coming in at 54.96 or 95.75. And I think we could definitely make it there, possibly, to just kind of sweep out this low. But we're going to also have to look at the NASDAQ. I need to see if we have any SMT divergences, because something like that could actually help us decide if we're actually going to come take that swing low, which we do not. Okay, so no SMT right there. So let's just stick to the ES for now. So obviously what happened the last couple of weeks, we have swept out all of this liquidity, right? And this is why I was actually starting the week off a little bullish, because I was expecting us to sweep out these lows and see that as the bearish objective being met, and then look for a bounce. Now, I was not saying that we're going to get a full-blown reversal yet back up to all-time highs or anything like that. I like to play level to level. So I had some key levels that I wanted to see hold. Ultimately, it was this weekly fair value gap. And then if we go to the daily time frame, I said we have also, I think this was on NASDAQ. We also had a daily fair value gap on NASDAQ. And I said, this is the last line in the sand for bulls. And we have basically just consolidated inside this daily fair value gap on NQ. Not a very convincing bounce, though. I mean, we have been holding it. We have not inverted this gap yet. We're pretty damn close, but we haven't gotten a strong daily closure beneath it. So as of right now, this is still holding as a bullish level, but I'm not very convinced in this. I'm really not. But this is going to have to be the line in the sands. Now, if we do get a daily closure beneath this gap, I'm just going to have to go here to the next daily swing low, right? So that's 18,752 on NQ. And again, on ES, it's 54.95, and we're very close to it. So I'm thinking at least the start of the week, this might be the objective. But again, I got to only get involved in this bearish scenario if we lose this daily fair value gap. Okay, that's going to be my line in the sand. if we maintain this daily fair value gap and actually start to push higher and clear out this swing high right here. So if we can take out this swing high in a bullish case and invert, I would say we have this bearish gap right here. But honestly, I mean, we're holding it for now. But I think the real bullish scenario would be if we can invert this gap right above it. And honestly, this is another good intraday draw on liquidity as well, right? Because we're very close to it. I think we have a bullish SMT divergence here as well. Let me see on ES, I think, yeah. So, yeah, this was actually what helped us get long on Friday. You know, I did not take a single short on Friday. It was all longs, and it was mainly due to this 4-hour bullish SMT. So we see right here, ES took out this swing low, while the NQ actually held it. So that's a bullish SMT divergence, and it did help give us that juice to push back to the top of the range. Now, I'm not super convinced in these lows right here. Okay, these don't look very strong to me, and I think it's very likely we come down and sweep these lows, and honestly, we could be getting ready to see a scenario like that first. So maybe something like this. We actually keep this high protected for now. We don't come and take it, and we actually move lower to take out these lows and maybe get a liquidity sweep to then come up to this 4-hour fair value gap. That could definitely be a scenario. Or the SMT holds, right? And instead, maybe we have a pullback, sweep some type of hourly high, and instead of this, we kind of do something like this. Up to the highs. I'll be ready for either one of those scenarios. And, you know, let's just, but again, let's just go back to the daily for now, because you know, usually when I make these videos, I kind of have the overall idea mapped out, and then I give you guys the levels. I'm doing this in real time, so bear with me here. From the daily, from a daily chart, I mean, it's hard, right? Let's pull up this fair value gap indicator real quick. This always helps draw my eyes. So we're still inside this small daily bearish gap. This one has been rebalanced, and then the only daily fair value gaps to the upside are way back at the top of the range. Now, I do think we could be getting ready for a significant bounce. I really do. I think as long as this daily fair value gap holds, we can look for higher prices. Now, again, if we lose it, we're going to look for 18,752. Those are going to be this is going to be the line in the sand for the week, though. This daily fair value gap, we have to remember that we do have that 4-hour bullish SMT divergence right here. So for the time being, as long as that holds, I will maintain a bullish bias to at least draw us up to this 4-hour fair value gap. And also the 4-hour actually paints some, gives us some more information. So we have these equal highs right here. Now I'm actually liking the upside even more now. Yeah, we have these perfect equal highs in the 4-hour. Okay. Okay, see, now I'm starting to paint a more clear directional bias. Yeah, can we just continue to drop like a rock and not get any significant pullback? Sure. I mean, it's been happening for the last 2 weeks. But, you know, we have to get a relief soon. And, you know, now that I'm looking at this chart, I think I'm going to continue with the same bias that I actually had last week and think that maybe we're about to be ready for it. We have these 4-hour equal highs right here. And we still, what I think we can do, this lines up perfectly with equilibrium of this daily price swing, right? So this is the 50% retracement. When you're looking for a mean reversion pullback, you want to see the market at least draw up to the 50% retracement. That's equilibrium. And we have a nice confluence, right? We have the 50% retracement lining up perfectly with these 4-hour equal highs. So that's actually, I really like that. Okay, so 2 scenarios I'm looking for this week. I think I'm going to be mapping out a more bullish bias. I'm going to be more bullish than bearish this week, believe it or not. 2 scenarios. We hold this SMT divergence and we actually just grind higher. If we can inverse this 4-hour fair value gap and hold it, flip it into support, I'll be looking to trade up to these equal highs. I think that'll be a very clear draw on liquidity. Very clear draw on liquidity. So let's map that out. Is anyone in here? Oh, we do. We got some people in the comments. For SMT, does NQ have to go higher or lower first? Then we expect ES to follow. So it doesn't matter which. Good question. It does not matter which asset paints the lower high or the higher low. It doesn't make a difference whether it's ES or NQ. But for a bullish case, it's going to be when we are down at the lows somewhere, tapping into a key level. And in this case, NQ made a higher low, while ES made a lower low. So that's the bullish SMT divergence. Now, in a bearish scenario, it would just be the opposite up at the highs. So let's say ES did something like this, took out this high, and then dropped lower, right? So let's say this is ES, and it took out this high up at resistance. But NQ at the same level did this. Did not take out the high. So that would be the bearish SMT divergence. See what I mean? That's the bearish case. And this is the bullish case. I'll just paint it out again right here. So ES made a lower low right here, while NQ made a higher low. So that's the SMT, right? That's the bullish SMT. From here to here. Bullish, bearish. Okay. Good question, though. A lot of people ask that when they're first learning. It'll take a couple times, but once you recognize it enough, you'll see it very clearly. It's just like fair value gaps. You know, it was hard for me to spot fair value gaps at first, but eventually I just started having them on my chart so often and recognizing them that, you know, I could see them very easily. Same idea. But okay, so one scenario is going to be that, right? So we hold the level and inverse this gap. That's one bullish scenario. The other bullish scenario that I'm going to give out is this. We start off the week looking bearish still. Two ways it can happen. Maybe we grind up higher overnight and actually rebalance this 4-hour gap, go lower, take out these lows, maybe sweep 18,752. And then we get our reversal. That would be very bullish if we actually sweep this low first and do it. But as long as this daily fair value gap holds, what we'll do for now is anticipate this SMT to be protected. And if we can just grind up, inverse that gap, maybe consolidate eventually. The main point is going to be a 4-hour closure on NQ above 950. So a 4-hour candle closure above 950 would paint the bullish scenario for us to come up and take these equal highs. Okay, so this is the line in the sand. This is the most important level, this 4-hour gap. Whichever happens first, whether we grind lower first and then come up here, that's fine. But this is what is going to be the confirmation. Once we take this 4-hour gap, that's the bullish confirmation. Until then, if we grind lower, we grind lower. I'll just trade level to level, right? If we take out these lows and just can't get higher, I'll look to trade down to 752 as the draw on liquidity. And then we'll reconvene for an idea then. But like I said, we've had like 2 bearish weeks in a row, 3 bearish weeks in a row. I think we're getting ready. We're down at the extremes of the range. I think we are definitely getting ready for a significant retracement back up to equilibrium. So again, those are the main confluences. Equilibrium from this price leg, 50% retracement coming in at 20,725-ish, which also aligns with those 4-hour equal highs. Okay, so that's what I want to see the market trade up to this week. That's what I'm going to be looking for. But we just got to understand that there's many different variables on how we can get there and how the market wants to do it. If it wants to sweep the lows first, then come higher, or if it just wants to grind higher, like I just said. But the key confirmation is going to be 4-hour candle closure above this gap. So 4-hour candle closure above 950 will be the bullish confirmation for the equal highs. If we get that, I think it's going to be very easy to trade up to these equal highs. I think we'll slice through them like butter. And for ES, just to like see if we could find confluence with the that bullish case, let's go back to the daily real quick. Again, equilibrium on ES from this price lag down is going to be coming in at 5,839. Okay, remember, we've swept sell-side liquidity here. We took out all these equal lows. We have a bullish SMT divergence down at the lows. And we've swept liquidity. So if we can get the bullish confirmations, so the bullish confirmation for ES is going to be virtually the same exact thing. So again, right here, 4-hour bearish fair value gap. This will be the confirmation. However we get there. Again, if we want to sweep the lows first, fine. But or grind up, doesn't matter. The main bullish confirmation is going to be 4-hour candle closure above 678. Hold it, retest, come up. And these are the same equal highs. They're not exactly equal highs on ES, but they're relatively equal. So right here again. And that's going to be the bullish draw on liquidity, the low-hanging fruit. Also, when you see all these wicks right here, right here, right here, right here, these are all relative equal highs. Again, and they're not perfect equal highs, but they're just they're not highs that I think are going to be protected long term. That's going to be the most important thing. Yeah, I think that's going to be it though. This is going to be my my draw on liquidity for the week. Again, we're going to be more focused on NQ because that's what I trade. So let's wait for this to load. So clip this. I'll make sure to clip it if it happens. But 4-hour equal highs, 731 on NQ. And again, the confirmation is a 4-hour candle closure above 950. That's what I'll be looking for. If we get that, I'll be looking to trade up to the equal highs up here at 728. I think that's it for this for the weekly forecast. Sorry, it might have been a bit rough around the edges just getting started. I probably should have mapped out my idea before I went live, but you saw me do it live. You know, one last thing I'll do. Let's actually map out the volume profile levels for tomorrow. Zach, I appreciate you doing this and explaining the process. Thanks, man. Yeah, I'm just here to get live and help. I'm going to keep going live on YouTube. Obviously, you know, you guys know I stream on ASFX TV, and that's my main focus for streaming. Again, if you're new to ASFX TV or you haven't checked it out, you can use my code ZARB, Z-A-R-B, for 50% off. That really helps someone like me who's trying to make a name for myself in the streaming space. You know, I trade live Tuesday, Wednesday, and Thursday. Austin Silver, James Bruce, Evan Dyer, they're on there Monday through Friday. There's one of us is there from market open till about 12 o'clock every single day. So it's just jam-packed with really valuable insight, and we all trade a little differently, right? So I'm kind of the black sheep. I trade ICT, but that's the value that I provide. I trade a different style, and I let people, you know, I challenge people to look at the market a little differently. And I think that's really valuable. So let's just map out the volume profile levels though. For people that are new to that, I know a lot of people like looking at the volume profile and see how I use it. So if you haven't seen me do this, you'll see how I map out these levels. Am I looking at Edgeful tonight to give any insight? Nothing yet. I'll look tomorrow. You know, the main reports that I use from Edgeful are the initial balance and the midnight retracement. Those are like my key reports. I don't overdo it and look at everything personally. So that's something I'll be looking at tomorrow in the morning. We'll see where midnight's at. And then once the initial balance sets, obviously that'll be really helpful. Like if we can get a break above the IB high by 10:30, 10:35 shortly after, it'll be, you know, a really easy way to get long. But okay. Session volume profile. Oh, James, what up, bro? Good to see you here, man. I'm heading back to work at the office Monday. No more work from home, so we'll be missing those live streams. Damn, bro. Damn, that sucks, dude. Yeah, you're a great viewer. You're a great chatter. You ask good questions. But hey, bro, keep in touch on Twitter, you know? And I'll be doing this. I'm going to get on YouTube more, so hopefully you can catch some of those. Maybe I'll do all of my weekly forecasts live on Sunday evening so we can, you know, interact with the chat and everything. But okay, volume profile. So this is yesterday's profile, right? So key levels for me are always going to be previous day's high. That's always a key level. Previous day's low. Then for the volume profile levels, number one always is going to be previous day's point of control. You guys know this. This is the most important level on my chart every single day. Where is the previous day's point of control? So this is already going to be helping us with our bias for tomorrow. Number two, we got value area low coming in at 19,504. So previous day's value area low right here. We might want to grind down to the value area low tonight. That seems very feasible. And we do have previous day's value area high coming in at 19,710. Since, when the value area high or low is very close to the previous day's high or low, a lot of times I'll actually just keep this one off my chart because they're just so close to each other. It's not relevant for me. So I won't be paying much attention to the value area high because we have previous day's high right above it, only a few ticks away. But okay, this is already helping with a case for tomorrow. Now remember, my weekly forecast is not going to mean that everything I'm looking to see happen is going to happen on Monday, right? This is what we kind of expect to happen throughout the week. But these are going to be my key levels for the day. And I'll keep it very, very simple. If we can hold above the previous day's value area low and get above the previous day's point of control in the New York session, easy longs for me. Easy longs to take out 788. So the top of the range that we've been in since last week. That would be coming in right here. That'll be an easy long. Now, the inverse of that, if we can't get above the previous day's point of control, and then we also end up losing the previous day's value area low, then very easy for us to look for previous day's low, right? Which is coming in right here at 19,299. Yep, right there. Yeah, so really simple. I mean, that's what I love about using the previous day's value areas to give me context on the strength of the current price action in relation to these levels, right? I always say, if you're new to using the value areas and the point of control, keep it simple. Just use the previous day's point of control as your line in the sand. So if we're trading below it, stick to a short bias. If we're trading above it, stick to a long bias. I mean, that alone will keep you on the right side of the market, realistically 8 out of 10 times. I really mean that. Obviously, because I use them a little bit more extensively and I've been using them a lot, I could take a long if we're below the previous day's point of control. But if you're new to using those levels, that single rule will keep you on the right side of the market 8 out of 10 times. So that's going to be it for the bias for tomorrow. I mean, if we stay below the previous day's point of control, I'll look for shorts down to the value area low. If we lose the value area low, I'll look for previous day's low. Really simple. If we can get above the previous day's point of control, I'll look for longs up to the top of the range here, 789. If we stay above that and we hold and displace higher, I'll be looking for the next clear level. We have these wicks coming in here at 20,156. Just trade level to level, but use the point of control as that line in the sand. Yeah, that's going to be it, I think. Let me just give you guys the volume profile levels on ES too. They're going to be similar, but let's just get those up as well. So again, indicator, SVP, session volume profile. Yep, they look almost identical. So we got previous day's point of control on ES coming in at 56.3150. We got the value area low coming in right here, 55.91. So again, I think it's probably very likely we're going to grind down to the value area low tonight. That's probably going to happen. Maybe we go lower too. Maybe we take out some of these wicks, whatever. I don't care what happens in the overnight session or the London session. I trade New York. But it'll be the same exact thing. If we can hold above the value area low, we can get above the previous day's point of control. I'll be looking to take it to the next logical draw on liquidity. which in this case would be 56.74. Top of the range wick right here. If we get above that, we hold above that, we'll be looking for the next logical draw in liquidity, which would be 57.50. If we can't get above any of that, if we hold the previous day's point of control as resistance, if we lose the previous day's value area low, I will look for previous day's low or even the range low, and then 54.95. That's simple. Just keep it simple. Use lines in the sand to give you that directional bias and stick to it. And I promise you, you'll be on the right side of the market 8 out of 10 times. Then all you got to do is get the entry. But if you can get the directional bias right, if you can get the draw and liquidity right, that's the hardest part. So yeah, guys, that's it. We've been streaming for 25 minutes. I'm definitely going to make sure to keep getting live on YouTube as much as I can. But again, ASFX TV is my focus. You can check me out there. You can get 50% off if you use my code ZARB, Z-A-R-B. Really helps me out. Helps people know that they want to learn from me, that they want to watch me stream. And I just, I'm really grateful for that type of thing. So I'm going to leave you guys with that. Happy trading. Stay safe. It's only Monday, don't over leverage. Don't lose your accounts at the beginning of the week. Keep it simple, keep it small. Let's see how the price action develops going into Monday and Tuesday and see if we can get this long bias, right? We can break above these levels. We want to see those equal highs get taken. All right. Take care, guys. Peace out. See you. Talk to you soon.